The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, we're going to be looking at gold to start off with. I've got the daily chart for gold up, and as you can see, we have the potential for a ABCD pattern coming in very close to where we are now. We're within about, the low today was in about $3 of the exact low we were looking for, 12.12. We got down to 12.15 and change. So it's very, very close. The thing that I'm watching from a timing standpoint, and this is the most difficult because time is the most elusive of all of the technical indicators we use, and that is that if you count the number of days from peak to trough, you'll notice that it's 55 days on the AB leg, and the 55 days on the CD leg comes in on the 22nd, which happens to be the equinox. And so we'll see what's going to happen. It's hard to believe that summer is over, but that's the way it goes. We were supposed to get 5 to 9 inches of rain here in Tucson yesterday, folks, and we didn't get a drop where we live. We live in the foothills of the Catalina Mountains, and we didn't get anything. There was maybe 1 or 2 drops on the ground, but very little. We're supposed to rain the next few days, but the big storm missed us, so we'll see what really happens. Now, after we've looked at gold, on the daily chart, what I'd usually do is I go down to a 4-hour chart or a 1-hour chart, something like that, and as you can see, over the past month or so, it's been almost perfect technically. You can see the head and shoulders pattern that formed at the expansions that we had at 1618 and the contraction at 618. And today's low was an exact 1.27 retracement of the low that we made way back in June. So this could be the bottom in gold. The number of days down is not right. If it were perfect and we were at 55 days down like we were in the AB leg, but in fact we're only 51 days down. So we have to wait until Tuesday. And I don't know whether 3 days makes a difference or not, but the market has been down very sharply, and we're going to wait just to see what happens. Now, if the market gets above the 1248 level, that would tell us that bottom most probably is in. The reason why I say that is that would be greater than the biggest rally that we had since July. Since August. So that's what I would be watching, is that if we do get a rally above the 1248 level. We've been waiting for this for quite some time. It's all set up to do what it's supposed to do, so we want to keep this on our watch list. We'll be watching it on Monday's show for sure to see where we are, but we're very close to what I think is a meaningful bottom in both gold and silver. Now, if we take a look at the silver chart, we're going to look at it on a long-term weekly basis because we are very, very close to the ABCD on this weekly chart. Also, the 786 comes in down at the $17.60 per ounce level, but the way the market is acting, for the first time in a long time, silver has started to act better than gold. It's held up support extremely well. Our low today was around 1830, which was it's had a little 27-cent rally from that spot, but that's really not very much in silver. Silver would have to get above 1910 per ounce for me to say that the bottom is in, but this has got a chance for a real rally, folks. I mean, we've been in a bear market since 2011 in April when silver hit 1950 an ounce, and we've come down almost exactly 786 retracement. So we've got to really watch this market very, very closely. We've been down for, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've been down 10 weeks without a significant rally. So saying that it is oversold is probably the understatement of the year. It still has not started up yet, but we got to watch this from a standpoint that it's ready to get ready to move, because it's really starting to look interesting here in silver. The next chart that I wanted to bring up here to just show you some of this divergence is the 60-minute chart in gold and silver. And as you can see, the silver has held up really well above the 1.27 level, and this has actually come back much stronger than gold on the rally back. So there's a couple of things that are telling us that this market is getting ripe for a real turn, and that's what we're watching. Now, one caveat: we have a little beaver in the woodpile here, because I'll tell you, this dollar index, hold on one second here, the gold-silver index looks like a falling safe. As a matter of fact, let me get this lined up so I can show these a little better. Oh dear, I hate working under pressure like this, but what are you going to do? Okay, I can do it here without too much trouble. Hold on one second. Get rid of that. You'll be able to see what's happened to the gold-silver index. It tried to hold the 618, and it failed miserably yesterday. And then today we had a gap down, considerably, lower than the low we had yesterday. So we've had another gap down. It looks like we're going to come down to the 786 level, down around the 88.10 level, which is another $1.30 lower in the XAU. That would fit in with a little bit lower price in silver and gold coming in to Tuesday. So I'm really watching Tuesday just because of the 55 days down, and I think it's important. We've seen this happen many times before, because that's where we have a absolute perfect symmetrical AB equals CD pattern. When that happens, then I'm going to say, well, this is where we want to, put up the barracks and try to, buy gold. If you buy gold in this area, when we finally get the buy signal, the risk would only be about $8 to $10 per ounce, which is less than 1% of the value of the contract itself. So that's what I'll be watching. It's very important, folks, because if we happen to break below that 1200 to 1190 level in gold, that's going to signal that we could have an acceleration, to go rapidly down to the level of, the $900 without too much trouble. It would be very unusual for it to do that, but that's how markets totally collapse, is after a big move down, they start to accelerate to the downside, by, whatever the reasoning for it. Now, I know I've had an email from one of our listeners here at TFNN asking about the fact about J.P. Morgan's role in, the manipulation of silver stocks and gold stocks and stuff like that. Folks, I don't believe that stuff for a minute. If they were manipulating, we would never know anything about it. And frankly, the cash market for both gold and silver is so huge that I don't know how any one person could come in and try to manipulate it. They might be able to do it for a short period of time, but I don't believe they would be able to do it for a long period of time. So I'm looking to, buy gold and silver here in the next few days. I'm not buying it today. I want to wait to see what happens on Monday and Tuesday, because these are the key days that we're watching for a timing sequence to look at, and particularly because the equinox is one of the. In fact, the autumn equinox was the key date of the Mayan calendar. If you folks ever go down into the Mexican jungle just south of I can't remember this. Not Cusco. No, that Cusco is Peru. I can't remember the name of the city in Mexico. But if you go to Chichen Itza, which is the Mexican pyramids, the Mayan pyramids, it's a really beautiful place. And if you go there on the day of the equinox, on the 22nd of September, and exactly at noon, as the sun hits the top of the pyramid and starts to move, shadows form a 45-degree angle on the stones of the pyramid, and as the sun moves from east to west, it looks like a snake moving off into the jungle. It's really an amazing thing that they could build something that would be that accurate because it's really quite spectacular to see something like that makes those 45-degree angles and goes to that point. When I was there in 1989 or 90, I believe, there were 250,000 people to see this event. And believe me, they were not set up to handle 250,000 people, but it was quite an experience to see that event happen. So September 22nd should be a very interesting spot in gold, just because of the 55 days down is primarily what we're really watching. So that's what we're watching in the gold and silver. I think we're very, very close. I've been following the open interest. They have not shown anything in open interest that tells us that anything really big is happening. We've not had a decrease. We've not had an increase. So the market is acting certainly normal, as you possibly could ask for. So we're getting close. And when the rally comes, if it does, it should be really substantial, because we're down 10 weeks. And to rally $150 to $250 in gold wouldn't be hard to do at all. And so we'll keep in mind that could happen. I would like to talk a little bit about what Basil talked about the Dow Jones tomorrow, because there's so much emotionalism tied up with this event that you could see the Dow easy 150 to 200 points higher, or 150 to 200 points lower. And believe me, I think that if it were any betting man, it would probably have to bet on the higher side as the lower side, because every time the market's broken 100 points over the past several months, people come in and buy it, and they've been right. So there's a lot of buying out there, that wanted to buy this stuff. So the bias would be to the upside. The key figure to me to look at, just for the Dow, and I'm not a follower of the Dow, but I do watch the index because it's so important, and that's at the same number that Basil talked about, 17,250. So far, the high today was 17,255. The S&P has made the same level that we did last week. It's made a slightly higher high, but is absolutely done very, very little. But the Nasdaq is interesting, because the Nasdaq has only made a 786 retracement of this whole move down, and it's done it in 2 days. I mean, it's been, hit 1404, and we went up to 1492 today, without a stop. I mean, it just was straight up short covering or whatever, new buying, whatever it happens to be. But we stopped exactly at the 786, on the Nasdaq on the way back today. That came in at 1491, and we're still trading within 5 or 6 points of that. So it could easily, blow through there and tell us that we do want to have another run. The one thing that this bull market has not had, and that is a spectacular blow-off, and we might get one of those. So we have to be, aware that this could possibly happen, and you certainly don't want to stand in front of it if, in fact, we do have a flying Melinda, I guess you would call it, to the upside, which we could. Okay, we'll take a little break here. We got the Dow up about 80 and the gold still down about 10.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I've been asked to take a look at the banking index. As you can see, we made a Gartley pattern in early August, around the 4th, when the market was bottoming right near that full moon. And since that time, the market has had about a 5% move to the upside. And we are almost at a double top in the banking index. The old high was around 74. We're trading at 73 right now. So there's a possibility that we could either make a double top or even maybe it extends on past the 1.27. But it has been very strong over the past 7 days. And we are very near double top formation. So we'll have a pretty good idea of what's happening here. Hold on a second here. See if having a little trouble with my headset to see if the sound is coming through. We'll have to wait and see if it's any better, but well, that's all I can do. They'll tell me if something's wrong from TFNN. I'll just continue until I hear something better. So, okay, so that's what we're looking at in the IBB. And the next one we wanted to look at is one of my favorites that I watch all the time, and that is the New York Stock Exchange Index. I'm going to cover the commodities here, folks, after we come back from the break, but frankly, there's not a whole lot to cover because they've just been down, 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 down. Now, whether they're getting ready to bottom or not, remains to be seen. but we're getting ready to start harvest now in beans, and then in corn pretty soon in October, and then beans shortly thereafter. So it's going to be real interesting what's going to happen with all this stuff, because they don't have room to store it all. There's such a big crop coming. Now, whether that's going to cause clearance sale prices, or they just store it on the ground, I'm not sure, but we'll wait and cover a little bit of that later. Okay, we've got the New York Stock Exchange Index up right now, and as you can see, since September 3rd, which was our high date, we made a 61% retracement yesterday. That's right where we're trading right now, right around 10,019, and we have taken out yesterday's high by just a few cents in the NYSE. So the overall broad market is not going crazy to the upside like the Dow Jones is, or the NASDAQ or the S&P 500. The broad market is still making a 61% retracement, and it might mean that it is actually just lagging the market, and it's going to catch up. We could certainly do that. There's going to be a great deal of emotionalism tomorrow, folks, for two reasons. One is the Scottish vote. They pretty much say that it's going to be a slam dunk no referendum. That's what the bookies are saying in London. They're giving 3-to-1 odds that it's going to be a no vote. That's a big turnaround from yesterday when it was 52-48. So somebody knows something, as they say in the trade. So follow the money, but I'm expecting that there'll probably be some type of surprise. I think it's going to be a lot closer, if not a yes vote, because of the fact that 16 and 17 and 18-year-olds can vote, and they're always looking for more freedom. We also asked to take a look at the IBB, and if you'll give me a second here, there we go. We'll get this up here. This is the biotech index, and we have made a double top in that we pointed out to you 2 weeks ago, and then we had the small ABCD correction, and now what we're doing is we're making a little retracement from that one. So the double top in the IBB is still pretty much valid, but it doesn't take much, a couple points, 3-4 points to get it into new high ground above 278. That would be 5 points from where we are now, and that would give you an indication that would want to go up to the 283 to 285 level. So the volatility that we're starting to see is very important, because we've already seen it in currencies over the past 2 or 3 weeks. We've seen huge moves in the euro and the pound and the yen and stuff like that. In fact, the yen is a very interesting pattern that we'll cover after the break, because it has such a correlation with the Nikkei Dow. And we'll look at that after the break. But the biotech index does look like it's in a minor downtrend, but I'm talking minor, just going back from late August. So it's lagging the market a little bit, because the rest of these indices have broken into new high ground, particularly your high tech stuff. So we'll see what happens with it in the next day or two, but it will be interesting, as they say in the trade, and it is always interesting. Someone asked me a question about the silver. What if it doesn't hit the we got to take a little break here to pay some bills. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we were talking about the silver because there's a possibility that it might not make that final target down at the 1770, 1760 per ounce. Right now we're trading at around 1850 and change, so there's still a possibility that we might not make that. That's one of the reasons why we're trying to go to a shorter term time frame to see where the support and resistance comes in, and that's what we're trying to follow. We already know that the price of silver and gold are down. It's been down for 55 days since the last peak, which is 55 trading days, which is quite a ways. That's about 7 or 8 weeks that we've been down. Those are trading days, so that means it's been down basically 10 weeks on a calendar basis. So we're coming due for a very, very strong rally, I would think, in both gold and silver. That's what it looks like. That maybe the rally will be very pathetic. We never know, because when you're trading, you never know whether you're going to be right or wrong until you are, and then also you don't know how much you're going to make until you're ready to make it. We got our first caller, one of our friends from Philadelphia. John, are you there?
Good morning to you, Larry.
Good morning. What can I do for you, my friend?
I was blowing as hard as I could, so those monsoon rains blew east of you instead of right over your head.
Well, you did really good because they were south of us about 15 miles. I'm only where our house is against the mountains. We're only 72 miles from the Mexican border, so we can see Mexico from the house, and it was getting pelted really badly from about 25 miles south of us into northern Mexico. But we didn't have anything here in Tucson at all. So you did a good job.
Good for the Tucson folks. Hey,
Yes.
Larry, I wanted to ask you, since you're conversing so thoroughly here on gold, silver, and the XAU, if I could ask you about the HUI daily chart. And it's just a hypothetical. I have no trade on right here, but I look at this pattern, and I wonder the following. I wonder if that December 2013, that's the extreme low, I think that was down in the neighborhood of 190, 185, somewhere down there.
Yes.
I can't help but think there's a possibility that in Pesavento pattern terms, that low was what will turn out to be an X point of a butterfly bottoming pattern. And, Larry, I will tell you, being a student of yours, read your books, and applying your techniques to the best of my abilities, I couldn't help but just marvel a couple of years back when we were looking at the weekly T-bond charts and how in July of 2012, the T-bond futures, making a high at 153, made a perfect butterfly top and then led to great trading opportunities on the short side thereafter. So I am reminded of having seen something work in real time with that pattern, and ask the question, if HUI is involved in a pattern that turns out to be a butterfly bottoming pattern, if I wanted to ask if you could possibly pull up or do your constructions on the HUI daily, and which would illustrate what the target might be if, in fact, this decline is the C to D of the last leg of a butterfly.
Well, that's pretty easy to do. If you give me 1 second, I can do that without any trouble at all because of the tools that I use here. Are pretty. We'd be looking down about it around the 170 level, John, is what it would look like. This would have to take gold and silver to a, pretty much of a clearance sale type bottom, I would think. But that's what it could do without any. All it needs to do is to break below 200. It's trading at 212 right now. And all the bulls would leave the table and be nothing left but bears, and it would certainly have the target of around 170. I've never traded this index. I know I follow it occasionally because it shows the number of bulls versus the number of bears in the gold market. And but right now it's just actually really nice from a bullish standpoint because you've got higher bottoms from December 13, and you have a higher bottom than you did in May. And you're right at the 786 level, so unless it collapses from here, it's actually got a chance to possibly rally from this level.
Larry, thanks so much. You've just posted into the Tiger's Den the construction of a butterfly pattern as applied to HUI. Could I ask you just very specifically? I see that target is roughly 170. I see that based off that low back in December of 2013. I see a notation on that chart of 1272. Does the 1272 projection and the AB equal CD, do they both come in and target that 170 level? Is that what that is, please?
Yes, they do, because what would happen is your BC swing of the expansion leg would take you down to that area of a 170 also. But I like the 127 number very much because when markets go to new lows and continue to go to new lows, they usually go to a 1.27 or a 1.618 expansion, much like we're doing in the stock indices like the S&P and the Dow. They're actually making extensions to the upside. So That's what I'm looking at, John, is that extension of the X to A leg.
Gotcha. Can I ask you from your perspective and all those years of trading, when you're looking at butterfly patterns, if say the HUI were to get to that level, and that's clearly it's not there, and we don't know if it will get there or not, but if it got there to that 170 where the 1272 and AB equals CD comes into play, can you share with us some guidance on what sort of risk you take, how much room you give in implying a stop loss if one is taking a trade at an entry point such as that, please?
What I usually do, John, is I base it on the amount of money that I'm willing to risk on a trade, and usually at something that's going to be trading like at 170, I'll take 3% risk of that, so 3% of that would be $5.20 per share.
Gotcha.
Okay, now if I were doing the British pound and it was trading at 160, you know, 3% of that would be roughly 50 pips, so that tells me what my risk is, because as you know, these numbers are so accurate that you can use a close stop, and that's one of the beauties of pattern recognition. However, people have to realize that it's only a probability. I mean, it's never a certainty. You know, you have to realize that you're going to be wrong a lot and you're going to be right a lot. So, like the princess said, I had to kiss a lot of frogs before I found the right one, but eventually you will.
No, indeed. And just employing that discipline of making your entry points when the patterns and the numbers line up, and then managing your risk. It really is just a terrific thing. There's no doubt about it. Larry, I might ask you if I could, in closing, ask if you might address either now or later in the show just what you see on the natural gas futures.
Sure. Let me. In fact, we were trading that yesterday, and we had a beautiful ABCD Gartley sell signal up there at the 403 level.
Exactly.
It's dropped down to 390 already, which is $1,000, in a matter of one day, which is really good. Now, as you can see from this chart, John, we've had higher bottoms ever since September the 4th here. So in order for this market to really turn down hard, we need to get it below the 3.8 level. $3.80 per cubic feet, and then we would, I would think, would start a downtrend, which would give us a price objective of around 320.
Right.
So, but at least it started in the right direction with the long bar down today. So those are the ideal situations that you like to see when you start a trade out to see it. But it's really a fun thing to trade. I mean, it's amazing how volatile it is, but the fills are excellent. The stop protection is when you get hit. It's always within a tick or two of where you thought you would be, and it's really a great trading vehicle. I'm really surprised about how well this thing really trades.
I agree with that entirely. In fact, I've been actively trading this as well. I might ask, could you pull up the daily charts? And that will show that the natural gas futures have been basically range-bound now since about August 1st.
Yeah, absolutely. I have that right here. I'll put this in for you, and we can chat about it.
And what I wanted to ask specifically is, given this market has been in a tight range since actually July 28th, I'm curious, when you look at that range, what conclusions, what jumps out at you, either positive, negative, or do nothing at all?
Well, since July, what it looks like to me is we made a slightly lower low by just a penny or two on August the 18th, and the market didn't do anything, and we had a pretty good rally. It went from 370 up to 4.1, which is a huge amount. Mm-hmm. And then it came back down to a 786 retracement. So what we've had now since August is we've had three higher bottoms. The real key here is that we made that ABCD yesterday, and we, in order to get this market to going to the upside, you've got to see a print starting to get above 405, and then you'd say, yes, we've got a chance for this market to go to the upside. Otherwise, it looks like we're going to pull down to that 380 level one more time to see if it's going to hold that particular level.
Yep. Yeah. In that case, I can see your line of thinking, namely, if you do get back to 380-ish, you'd be looking for buy setups because you know where you'd run your stops.
Sure.
Apart from that scenario, is there any buy scenario that you see, given your techniques, other than waiting for 380 and before it gets up and over 405, 410?
I can't see anything. Right now it's setting at a 61% retracement of the low we made 3 days ago.
Right.
That's one way of looking at risk, but frankly, with that long bar down that we had today, I think it deserves respect, so I'd rather see some more price action come in. Ideally, over the next few days, if you're looking at a half-hour chart, you're bound to see an ABCD pattern pop up.
Yep.
And that's the one. Then you have, several things to look at because you have the numbers of the ABCD leg or swing to determine, that tells you where your price is. You also have your X level from the lower low, and you have an X level from a higher high. So you have a whole lot of ratios that are going to tell you where you are once you have more time to look at. So I think you just have to be patient here. Remember, John, having no position is actually a position.
I can't agree with you more. Absolutely right on that score.
Yeah. Just waiting is actually a good position. So I would suggest wait a few days, and like Monday or Tuesday, you'll have a pretty good idea of where you are.
Larry, always enjoy speaking to you. I learn how to refine your techniques each time we talk, so I appreciate it, sir.
Well, I learn a lot from you each time, too, John. Thanks for calling in, and I really appreciate it.
Very good. Bye now.
Okay, thank you. Okay, we've got the natural gas covered. We're going to switch over now to the grain markets because we're still under a great deal of pressure in grains. Last week we had a rally off of the 1.618 that took beans up just about $1,500, and now they're heading back down to that 1.618 level again. And you'll see that we're coming into that area of around $9.70 for bushel. We're trading at $9.74 now in the soybeans, so it's trying to hold that level. But we have a lot of bearishness out there in beans, as you well know. We've been talking about this for quite some time. In fact, we were going to have Rich Anderson on today from Anderson Capital Management, but he was in a travel mode today, so we were not able to get him on. But I'm pretty sure next week we'll be able to have him on. Also, I'm going to have Mark Douglas back within the next week or two to spend some time with us, and we'll see how that works out. But the beans look like we're going to go and make a new low. The low that we made last week came in at the 969.5. We're only 4 cents away from that, so we want to watch that level very closely, because if it just takes it out by a little bit and doesn't go down, that could be an indication that this 1.618 expansion is actually pretty good. But right now, it looks like it wants to go lower, and that's where we're going to let it go until we see some type of a spot to give us a place where we don't have to risk very much at all. Now, the next one we want to look at is the corn market, because 5 days ago, this is actually looking a little bit better than the beans, but 5 days ago we made a 786 retracement down to the 390. Oh, we got to take a break. Oh my gosh, time's going so fly when you have fun. Got the Dow up, we got the gold down, and we'll be back after this break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to one second. The corn market has held the 786 level really well here so far, anyway, at the 339 a bushel. And we have more corn than they have water in the ocean, I think. But, it still technically should have a bounce from here. We'll wait and see how it transpires. The next one that I wanted to mention, I've had a request here to take a look at the emerging markets index, because we had a big ABCD pattern complete in that about 8-9 days ago. And the market has had a big break, but has not rallied very much since that time. In fact, it's been down the last 2 days with the market really strong. So we'll have to wait and see if that's going to hold up. The price of wheat just keeps falling. I'll post that in here to let you folks see. It's been the wicked stepchild of these commodity markets for quite some time now, and we've broken well below the the 1.27 level in the wheat, which tells us we've got another 9 or 10 cents to go to the downside, and you'll be able to see that in just a second. So there is a possibility we might get some type of a bounce in these grains here shortly, but right now they're still straight down. We've been down every day this month in the wheat market, so that tells us pretty much that the bearishness that we've had. We finished that ABCD in wheat up at the 579 level, and we're almost $1 a bushel, which is a considerable amount of money in just a month. So that's something that you want to keep in mind. I've got to end the show here. I think that this is the commodity show, folks, and I know gold and silver are very important to us here at TFNN, and I'm really serious about watching this gold market. If we get down a little lower, down to the 1212 level, we're trading at 1227 right now. That's similar to silver, down around 1810, maybe even breaking $18 an ounce. But we've got a market that's very oversold and still in a very long-term uptrend. If you go back over the last 8 or 9 years, we're still making higher bottoms, so there's a slight positive there. The whole world has no interest in them at all, which is another good thing. And so we have to watch potential for gold and silver for a bottom in this area. We won't have to risk much if the bottom does come, but we want to wait and see. Our game plan in the gold and silver is we've already looked at the number of days from the last high to the last low was 55, which happens to be a Fibonacci number. And from the last high we made recently to where we are now, the 55 trading days down comes in on the 22nd. So we'll keep a very, very close eye here on Monday's show, and we'll have a good idea of where we're going to be, because Monday will be the 22nd, so we should be spot on, ready to see what gold is doing at that time. No matter what happens, the amount of money that we have to risk on this would be a very small amount, because gold trades at 1,200. If you just took 1% of that, your stop would be around $12, and that's certainly acceptable when you have a contract that's it's $120,000, and you have to risk $1,200 to trade it, because it moves so quickly that you can make 2 or 3 times back your risk in a matter of a short period of time. And if you're wrong, you know what your downside is, and that's the whole key to this, is how much you have at risk, not how much you're going to make. So we are looking for a bottom here in the gold and silver. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.